Hello, welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified investment and security specialist, and I've been investing in the Nigerian stock market for the past 2 decades. It might interest you to note that market participants or investors are classified into three categories. You have the top 5% comprising of the mutual fund managers, pension fund managers, institutional investors, wealthy individuals, and other experienced, capable, intelligent, skillful investors in the market who have been investing for a very long time. They are classified, under the first 5%. You have the middle 15% that merely follow the top 5%, and you equally have the lower 80%. They form the vast majority of the investment universe. Actually, they comprises 80% of the overall market participants. These individuals actually are merely not able to find their feet. They invest by trial and error and lose money in the process, lose money, here, gain a little here, lose much of money there because of lack of maybe experience or exposure or talent or skills or the time to really sit down and take care of their portfolio. And that's why I came up with this particular service, the portfolio management service. If you really want help in optimizing your portfolio, you want to really make money in the market, you want to really have a higher level of returns on investment, please you will contact me by, you dial that number, you can contact me on WhatsApp so I can come in and render, necessary assistance to you, in your investment journey. So you want to talk about the fundamental analysis of this particular company, Guaranty Trust Bank. Guaranty Trust Bank or GT Holding, GTCO, is a very popular bank in the banking sector of the Nigerian Stock Exchange. Let's see precisely how we can analyze the company's fundamentals. So let's take it together. We want to consider the company's revenue. What we have here is the figure for the third quarter. The fourth quarter isn't yet out. So you want to make do with what is available as an investor. You make do with what was available at the moment. It could be first, it could be second, it could be third quarter, as the case may be. That shouldn't stop you from analyzing a company. So in this case, we are using the company's third quarter result. And we discovered that the revenue generated as at the year 2024 third quarter was 950.866 billion, 950.866 billion, as against 1.208 trillion naira in the third quarter 2025, giving us a percentage increase of 27.04%. 27.04%. We now consider the company's profit. The gross profit there, actually the company, realized 781.476 billion naira as against 952.140 billion naira in the third quarter 2024. That gives you an increment of about 21.84%, in the gross profit level. So let's also look at the profit before tax. This is where the entire analysis tends to turn sour. It's no longer pleasant at all. You could see, a decline in this key parameter. For the profit before tax, the company generated, 1.219 trillion as against 900.804 billion naira, in the year 2025, representing a 26.11% decline in a profit before tax. We now want to also Consider the profit after tax. The profit after tax here, the company realized 1.085 trillion, 1.085 trillion as against 699.641 billion naira, in the subsequent year, representing, a decrease, a decline of about 35.52%. 35.52% was the decline the company recorded in profit after tax. We now go to the earnings per share. This is the company's earnings per share. Unfortunately, there was a drop in earnings per shares, okay, from 38 naira 41 kobo to 20 naira 71 kobo. This is an important aspect we must consider. There's a decline here. Although the company share price is doing well, it's climbing up, all right, but the figure here is somewhat discouraging. Generally, except something is done to bring it back to normalcy, to kind of, bring it back to a growth trajectory, the price increase may not be sustainable. Okay, and so this one represents a decline of 46.09% in earnings per share. We now come to the company share price. The company benefited from the bull run, all right, that started last year and early this year. Okay, and so the company share price jumped from 44 kobo 60 kobo 44 naira 60 kobo to 120 naira, giving you an increase of about 169.1%. 169.1%. All right. So if you had invested, 44.6 million in this company, that will give you 120 million naira. That's what this particular figure is all about. Invest 44.6 million, your investment will turn to what? We turn to, we return, will generate 120 million naira. So we are through with this aspect, this site, this segment of the financial statement. We want to look at the other segment as well, but don't forget the fact that this decline, is somewhat, it's a red flag investors must take into consideration. And for this particular figure, the earning per share here for the company GTBank, GTCo, the shares outstanding is 36.55 billion naira. Sorry, 36.55 billion. And then the market capitalization is 4.39 trillion naira in market capitalization. So it's a very big company because the market cap is in trillions. All right, 4.39 trillion naira. We want to also highlight the company's equity. Equity here simply means shareholder values. The portion of the balance sheet that belongs to the shareholder, you call it shareholder value or the equity. You simply arrive at it by subtracting the company's total assets minus its total liabilities. So you have 3.37 trillion naira the company's equity. So the company has a solid balance sheet, a very strong balance sheet, okay, because of this level of equity, this level of cash in the balance sheet. And so you now go to the company's equity per share. The equity per share actually is the equity divided by the number of shares outstanding. So you have 92.2, 92 naira 20 kobo, 92 naira 20 kobo. And the cash position here, cash position, cash equivalent, cash equivalent, cash at hand, cash in the bank, is 4.5 trillion naira. The company has a huge cash position. All right, as a bank, you should expect this. You should expect this. That's 4.5 trillion, naira in cash. So now we want to highlight the company's PE ratio. The PE ratio is simply the ratio of the price all over the company's earnings. The price all over the earnings. The price here is given as what? It's given at 120 naira. And the earning here is 20 naira 71 kobo. By the time you divide this particular figure, the price all over the earnings, you are going to arrive at 5.79, 5.79, and that is what the P ratio is all about. And so this tells you how expensive or how cheap the company is. Okay, Zenith Bank has a P ratio of 5.00, whereas GT Bank has has a P ratio of 5.7, 5.79. So it's telling you that for every 1 naira generated as income, as earnings, you are buying that 1 naira earnings, but 1 naira unit of earnings for as high as 5 naira 79 kobo. But it's still cheap because This is a mid single digit figure. It's not a high double digit or a triple digit figure. So the company is relatively cheap. But my major concern here is this drop, this decline in both profit after tax and profit before tax, and also the decline in earning per shares. If this decline persists, it's going to affect the company negatively when it comes to the share price. But if it's an improvement in the subsequent quarters, then of course it liquidly indicates in the rise in share price eventually higher than what it is here. Should you buy GTBank? Actually, personally, I don't have GT. I don't buy Zenith, at least for now, until this area is worked on, until I can see improvement, in the before and after tax profit figure, as well as an improvement, an increase in the company's earnings per share. Before then, I think I should hold on, remain at the sideline until this, increment comes, these figures disappear, and you start seeing positive, values in this particular column. So if you feel like buying it, fine. You can make it a very tiny portion of your portfolio. But personally, there are better opportunities than this. Opportunity where you not come across all these negative tendencies, negative values. They are there in the market. So you mustn't buy GT, you mustn't buy Zenith, because if you look at the market critically, you discover that there are better performing companies than this particular one. All right, and so please like this video and subscribe to this channel if you've not done so. Help me share this video to your friends, your people in your community, so we can reach out to about 1 million Nigerians with this important message of investing in the Nigerian stock market. The market is vibrant. The market is somewhat bullish nowadays. The market is a very important avenue for wealth creation, and of course you can't create wealth without adequate knowledge. The more you learn, the more you earn in actuality. So please watch other videos in my channel about investing. It will go a long way in broadening your horizon and skills, knowledge, and proficiency when it comes to investing. Don't forget that I'm also available to offer portfolio management service for those who are interested. You could contact me, and I can see how we can sit down and breathe life into your portfolio, so to say. You understand? So you can optimize it for better performance. You could rebalance, re-strategize, and do all those things to make sure that you have better returns on your investment. Please watch other videos in this channel. It will help you as well.